Folks, let's talk about distressed sales, and then I'll get into the latest home prices and insights for the Peel and Durham regions for week ending August the 30th, 2023. Unfortunately, the real estate climate, the economic climate that we're in right now, we are seeing more and more distressed sale type properties, more so now than in the past, and there's more coming. That's just the environment that we're in right now. There's all sorts of different kinds of distress type of situations. But what I'm starting to see more and more of, which doesn't quite make sense to me, is that the listing, it's actually labeled, it's written in the description that this is a distressed sale property. Now, usually when I'm looking at properties with our buyer clients, we'll research some of the properties that they're interested in, and that's when I uncover that it's a distressed sale property. It's not written in black and white for me to read. Usually, I'll do the research and we'll figure out, man, if these people actually sell at the price they're listed at, they're going to be losing $50,000, $150,000, $250,000. They're going to be losing money selling at the price that they're listed at. And that's how we kind of figure out, hey, you know what? Maybe there's an opportunity here, or this is a distress sale type of situation, because why would a seller willingly just be okay losing money if they're not forced to? And then, we do more research to try to figure out why and what's going on. But there's different types of distress situations. My thing is when it's labeled distress sale, what the seller's actually doing is waving a flag saying, hey, I'm in trouble. And what you're doing is attracting the sharks to come and try to take advantage of you. It's one thing if it's on the market, people got to do research, they can see that, hey, you're going to be losing some money, and they could try to get it at a better price, but that's one way. But to label it as distressed sale, you are openly attracting the sharks. You are asking for people to try to take advantage of you. Labeling it as a distress sale, it's kind of like a retail store having a big sign in the front that says, going out of business, everything must go. Anybody going into that store is looking for a bargain. It doesn't matter. They could be the nicest buyers. They could be buyers prepared to pay full retail price for those goods. But the minute it says, going out of business, everything must go, they're walking in looking for a deal. And if the deal isn't there, they're walking out again without purchasing anything. They're not going to pay retail. Even if the goods, nothing's changed. They could be in perfect condition. Because of that one sign at the front of the retail store, they want a deal. The minute you label your house as a distressed sale, buyers want a deal. On top of that, it's a lot of these listings we're seeing, it says distressed sale, and it says seller must sell by such and such a time, or must have a firm deal in place by such and such a date. So they're doubling down on the pressure that the seller has. All you're doing is giving more ammunition for the buyer to try to take advantage of you. Now, this could be the strategy. You could put distress sale on your listing as a way to attract people. And maybe you've built in the negotiation into your pricing. Maybe. But I phone some of these listing agents and I try to get more information. And some of them will tell me straight, the price that it's listed at is the absolute lowest that the seller can accept. They will not take a penny lower. They can't. So I'm thinking, but you're attracting the people that specifically want to pay less than what they're seeing. The strategy's all off. So look, there are other ways to get the sale that you need quickly at the price that you need. Labeling it as a distress sale works so much against you. You're giving all, you got nothing else to play. You got no cards in your hand at all. You're giving all the negotiation power to the other side. There's other ways of doing it to get the results that you need, even if you are in a distress sale, must sell situation. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about here, subscribe. And if you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video, in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Let's get into the numbers. We're seeing more and more distressed sales. That's just the economic climate that we're in right now. Let's look at the numbers here. These are average sold price for Mississauga, Brampton, Durham. Now for Durham, I'm using Pickering, Ajax, and Whitby as my Durham sample for detached properties only for week ending August the 30th. For this 1 week, average prices came down in each of these regions. Now, I do need to say, you know, I'm often talking about when there's a long weekend, I'm saying, oh, but there's a long weekend, so sales are lower or average prices are lower, whatever the case may be. But this week, week ending August the 30th, this is the week before the Labor Day long weekend. This is like the week before Christmas. Numbers are a bit out of whack. Some numbers don't make sense. But also, what we're going to see is listings coming off the market. It's just a natural date when you put a property for sale at the beginning of, say spring or summer, and you put an expiration date on the listing that it expires at the end of the summer. So there's lots of properties coming off the market that we expect to come back onto the market in the fall or after Labor Day. So let's take a closer look here. We're going to start off with Mississauga. 31 detached properties were sold. We can easily see sales are trending down. Of the 31 that sold, 3 of those were at $2 million or more. Average sold price came down 1 week to the next. It's now sitting at $1,330,000. We used to be in the high 1.6. Now we're in the high 1.3s. I put a star here because 1,380 is lower than the lowest month we had for average prices last year, which was October last year. 1,380 is lower than that. Compared to last year, 1,380 is 10% lower than where the average sold price was a year ago. The median price of 1,240 is 11% lower than where the median price was a year ago. And you could easily see average price and median price have been trending down. I have here for 3 months, but they've been trending down for a while now. 31 we said were sold. 32% of those, less than a third, sold at list price or more. Now, that percentage will almost never be zero, even in a distressed sales situation or in the kind of climate that we're in right now, the kind of real estate climate. There's always going to be properties selling at list price or more because it really boils down to how aggressive properties are priced. If prices on a listing is really aggressive, there's going to be buyers just buying it immediately at the price or even competing. So there's always going to be a few of those. So that percentage will never, I shouldn't say never, will almost never be zero. Listings are up over the previous couple of weeks. 91 detached properties were listed. Here's a common thing that we're going to see. Well, we've seen active listing now for months increasing, so there's more and more inventory. But from the previous week to week ending August 30th, active listings has come way down. That's because of what I said earlier. There's lots of properties that were either terminated or have expired the last week of August, and many of those will come back on the market after Labor Day. So this trend here, or the whole idea of active listings dropping, you're going to see that across different parts of the GTA. Months of inventory, although it's down over the previous few weeks, it's now sitting at 3.4 months of inventory. It's much higher than what we've been in the past, and months of inventory has been trending up, and as such, average prices have been trending down. Here is Brampton. 34 detached properties were sold. No properties sold at $2 million or more. Average sold price is $1,185,000. We were in the mid 1.3s or just below the mid 1.3s, and now we're at the high 1.1, closer to 1.2. Big difference in price. Compared to our lowest month, which was October last year, we're pretty close. We're a little bit higher than we were for our low point a year ago. Compared to last week for the same week, compared to last year for the same week, we're 4% lower than where the average sold price was a year ago. The median price of 1,141 is 3% higher than where we were this time last year. And both median price and average price have been trending down. 34 were sold. We said 29% sold at list price or more. We were in the 60s and 70s. We're now less than 30% selling at list price or more. Active listings have been increasing, but this 1 week, just like I showed for Mississauga for detached properties, active listings drop. It's the end of the summer. Last week before Labor Day, properties just come off the market. You're going to see this again year end. Any new listings coming up will have an expiration date for the most part, the end of December. So that last week before Christmas or before the end of the year, you're going to see the same thing. All of a sudden, it seems like, hey, what happened to all the listings? A lot of them are coming back. Months of inventory for Brampton continuing to rise, now sitting at 4.8 months of inventory. We are approaching a buyer's market, but pretty much a seller's market, although there'll definitely be pockets of Brampton that are going to feel like and behaving like a buyer's market. Here is the Durham region. Again, Pickering, Ajax, and Whitby is my sample for Durham region. 36 detached properties were sold. Average sold price is down from the previous week. It's now at $1,088,000, which is slightly lower than our lowest month last year, which was $1,090,000. Average sold price has been coming down. Compared to last year, $1,088,000 is 2% lower than where we were for the same week last year. The median price of $1,028,000 is 6% lower, and it's pretty clear to see average price and median price have been trending down. 36 were sold, 61%, it's actually quite high. 61% sold at list price or more. Listings, active listings, have been increasing. However, this 1 week, they've come down a bit. And months of inventory now sitting at 1.9, although it's down from the previous week, but only, slightly down. It has been trending upwards. Here are condos. Now the condos, this is just for Peel region, and the majority of these condos are being bought and sold in Mississauga. 35 condo apartments were sold. One of those was at $1 million or more. Average sold price is $616,000. That's up from the previous week. It's a little bit higher than where we were for our low a year ago, which was November. 616 is 4% higher than where we were a year ago. The median price is 3% higher. The median price sitting at $610,000. And the median price, it's kind of tough to see what's happening there, although it looks like over the last few weeks it's kind of flat or maybe trending up a little bit. But average price has been coming down over the last 5, 6, 7 weeks. 35 were sold, 20% were sold at list price or more. Active listings has been trending up, so there's been way more condos available for sale. But this 1 week, they came down. And months of inventory sitting at 3.7 months of inventory. We were 1.5, 1.8. We're now sitting 3.7, 4. You could average out the last few weeks if you like. Here's a quick summary though. Pretty much sitting in a balanced market across Brampton, Mississauga, Durham, across the GTA, to be honest, in most areas. Some areas are going to feel like a buyer's market, but generally speaking, we are in a balanced market. Thanks for watching. Have a great day.